auto as a pack till last month, or at least actually till Friday when we got the sales numbers, the saving grace for the auto pack was, yes, margins are coming off, you've got input cost pressures, but they are being able to show or post strong volume growth. Now that seems to be turning. You've got reports saying that they're going to be, most of the automakers are going to be cutting production by 10 to 15% in the following months. How would you read auto now that news of production plus margin pressures coming in?
Yeah, clearly the environment is deteriorating further. What we see is, that they have the biggest sensitivity to a PLR hike, and the rate tightening impact will be felt probably over the next 3 months. Margin, so they've been squeezed on both the fronts, top line as well as margin. We see inventory rising, and this is going to play out for the next 6 months. So clearly you underweight the auto sector at this point of time. In this phases, typically what happens is, people trade downwards, and you see some amount of optimism in two-wheelers. But if environment doesn't improve further, then this is also likely to see a deterioration probably 6 months down the line. So in the current context, two-wheelers are a little bit better than four-wheelers. But yes, we could see this deteriorating or changing probably 6 months down the line as well.
Bharat, would you recommend any of these fertilizer stocks like Chambal Fertilizer, Deepak Fertilizer, RCF, perhaps from a trading perspective?
Chambal Fertilizer has a support at 79 levels. If an investor or a trader wants to go long, he can keep that as a stop loss. On the upside, it will face resistance around 92 levels. And if that is crossed, then it would be heading for a century mark. It has a good movement. It's making higher bottom and higher tops. So Chambal Fertilizers looks the better of the lot.
Bharat, what's your call on Nifty? We shut shop at 44.13 on Friday. Do you think the market in the current leg itself can move up to about 4,600, 4,700?
See, Nifty has started this up move from 16 July when it made a bottom of 3790, 3800 around. So this is a pullback rally. It is too early to say that this is a new bull phase. So currently I am labeling it as a pullback rally. Now in this rally it goes up in 3 waves, where we had the first up move coming up to 4538 on the Nifty futures, and the current move is a reaction of that. Now last week it corrected 50% of this up move, and again it has started going up. So if it crosses 4450 level decisively, then we would see the up move further going up. Otherwise we would see the second leg of the reaction of the rally, and in that reaction, if 4200 holds, then it would be making a higher bottom compared to 4160. Otherwise it may go down to 4080 levels. This is the immediate view on Nifty on the downside. And on the upside, once 445080 level is breached, then as I mentioned earlier, there is a gap at 4524 and 4556 level. So that gap would be breached, and then it would be heading for 4650 to 4800 levels.
Harendra, if you look back into the Q1 earnings season, which sectors do you feel showed you maximum pace, and which sectors show you maximum caution?
See, I think, for that matter, the cement sector clearly showed some amount of resilience, and I think the pessimism that was priced in was not fully played out. So sales numbers were a little bit robust than what market expected. I think banks to an extent managed their numbers pretty well, and the pessimism that had been priced in was far more severe to that extent. So I think more on an overall basis, some negative surprises on the telecom side. We saw some pressure on ARPUs. So I think a little bit of a mixed bag, but we are not way off from what the market was expecting. In fact, we are a little better than what the market was expecting.
But Harendra, how does the 3G policy guidelines now change things for telecom sector? Do you feel it radically changes the way you approach these stocks going forward? I know it'll take some time for the auction process, etc. But have you revised or changed your expectations on some of these stocks?
Clearly, I think it's going to be for the listed players. It will be only a increase in the licensing fees. Yes, the competitive landscape will change a little bit, but for the listing players, it will be only a small expense considering their balance sheet size.
All right, gentlemen, do stay with us. We'll slip into a short.
Bharat, my question to you: do you think capital goods, as a space, could see a little bit more in terms of gains? L&T, talk about that particular stock if you can, and BHEL as well.
Particularly BHEL, in the recent past, it has made a very good base around 1580, 1600 levels. So once 1830 level is breached and sustained, then it would be heading for 2000 mark. So BHEL looks a very good buy with a very favorable risk-reward ratio.
News flow also coming in. Let's update you with something that we reported exclusively on NTV talked earlier. That was source-based information now confirmed by the management of Jindal Steel and Power. And I quote here, they say this is our first entry in oil and gas industry, but considering its importance and that it is a natural extension to our existing business, we will be looking out for more opportunities, unquote. That is JSPL to NDTV on 2 oil blocks bagged in NELP 7. So big news coming in. Those were originally allocated to ONGC, and now Jindal Steel Power has assured and has confirmed that they have got ownership of those 2 oil blocks. Harendra, good move in the right direction, you feel, because it is a natural extension. Yes, it also provides raw material security to a big extent, and something which is probably synergistic with the existing business.
Possibly, but I think oil and gas business is a high risk reward business, so it needs to be watched out how strategic or how core to the business it is.
All right, would you look at some of these steel players right now, Harendra, in a view of the fact that they've been able to maintain profits and maintain margins despite a price freeze announced by the government? 3 months, of course, they've been coping with that. And we know our domestic steel prices are 30% lower than international steel prices. But still, the ability to hold on to margins at times like this, does it reassure you on their fundamentals?
See, if you look at Tata Steel, per se has given good results, and from what we could make out from ArcelorMittal's results, Coros is likely to post similar numbers. So I think clearly Tata Steel emerges as a winner there. But is the other players like SAIL and Jindal, JSW have faced raw material pressure. So to that extent, prices are likely to remain constrained, capped, and margins are going to be under pressure. So, but I think for the next 2 or 3 months, we should continue to hold, because I don't see prices coming off so sharply, that is steel prices. So metals continue to remain a preferred bet even in a tighter environment. Currently, what's happening?
Harendra, you've had a chance to look at HCL Technology Q4 numbers, came out on Friday. There's been a large forex hit on expected lines.
Yeah, actually, because it is a June-ended company, I think it had to take that hit. I think as far as what we have gathered is, I think they've realigned their hedging policy to around 45 rupees. So they're starting on a clean slate at this point of time, and valuations are compelling at this point of time, considering whatever has happened last year.